Robert Kiyosaki, a famous Japanese-American entrepreneur and author, warns people about an impending bubble that is said to be bigger than the one from 2008. He calls this the everything bubble, which he believes will be the biggest crash we'll ever experience. Hello and welcome to Eminent Investments. In today's video, we'll talk about Robert Kiyosaki's warning about the biggest crash in human history. If you're intrigued by his statement, then you better watch the entire video. Before we get into it, give us a like and subscribe to the channel while you're at it. If you're done with that, then let's get started. Think of a football stadium, and it's gradually being filled with little droplets of water. When does everyone notice that this is actually an alarming situation? Now think of a little eyedropper, with every drop starting to double in size over the last minute. Generally, it takes a while for people to see that there's an impending dilemma. With the 50 minutes it takes for the entire stadium to be filled to the brim, it's at the 45-minute mark that everyone starts to understand how dire the situation is. With those precious 5 minutes, the whole field changes from a mere partial view of the water to a full-blown inundation. This demonstrates the important concept of exponential functions. Most of the problems we face unfold this way, where it's already too late to alleviate the effects of a problem because it took us too long to realize that it's actually there. At that point, we're left with no choice but to focus on surviving. In the context of economic and financial concerns, the conventional opinions of experts like Cathie Wood from ARK Invest and other investment gurus often stress that this time it's different and that we're about to experience the birth of a brand new economic paradigm. However, Robert Kiyosaki chooses to highlight the incoming consequences of the extravagant debt that is stockpiled in the system. In a way, this is like borrowing money from the future. Although people tried mediating the repercussions through procedures like short-term fixes and money printing, Kiyosaki claims that we're coming close to a critical juncture. We're starting to witness signs that indicate the existence of the crisis, just like the football stadium being filled with water. However, it's quite bleak as to when it will finally hit, but it is predicted to happen in a decade rather than just a couple of years. Consequently, whatever the outcome is will automatically be a default on our obligations. The biggest choice that we'll have to make is whether we'll allow this default to be the consequence of conceding to the collapse of debt, which is the deflationary aspect of things, or will we print more money as a way of inflating our way out of the problem? Do know that this is a desperate attempt to meet the obligations to pay off debts, and it will kill currencies. However, if Kiyosaki were to choose from the two, he'd rather pick the latter. He adds that it's better to politically inflate despite receiving the same results in the end. In the last 4 minutes that remain before the stadium gets submerged, are we going to keep making the same choices? Kiyosaki stresses how bad of an idea this is. We're fresh out of the lengthiest bull runs in history, which took about 11 years. This began in 2011, and during that time, Kiyosaki made the biggest investment returns in his entire career, thanks to the crash of real estate, mortgage-backed securities, and collateralized debt obligations. He took the opportunity to borrow $300 million to purchase real estate properties all over the Southwest. However, when he looks at young investors dealing with the longest bull market, he can't help but think that these so-called gurus have never seen a real crash in their lives. Soon enough they will, and it's going to be a major one. With this, he warns everyone to be cautious about who they believe when it comes to advice, because chances are they haven't even seen the worst. Furthermore, he noticed that all the young investors had the same claims that this would be a different crash. They even recommend not going against the FED, which absolutely baffles him. The FED can't print oil, gas, or even food, which means that not every problem can be mitigated by printing more money. Kiyosaki also points out the weirdest thing about being an investor in his time and age. He recalls Paul A. Volcker, the former chair of the FED, who claimed that a major crash would hit. He raised interest rates, and Powell, the current chair, is channeling the very same energy. However, back when Volcker attempted to crush the inflation, the debt to GDP was around 30%, but today it's at 125%. If Powell is anything like Volcker, Kiyosaki is worried that it will go badly, because if history tells us one thing, it's that a soft landing is impossible. The FED isn't on our side. Today, the reverse repo market is operating at $2 trillion per day. That's quite massive, so he sees no rationality in believing the FED. Kiyosaki doesn't have an affinity for bonds, stocks, or mutual funds, and he doesn't even deal with paper. He is not urging everyone to do the same, but he does point out that the FED is trying to brainwash people into getting into those types of investments. This is the system that they want you to follow: to get a degree, get employed, pay your taxes, and invest for the future. You're also recommended to invest in bonds, stocks, mutual funds, and more. Based on his experience, communism is far from pleasing. In relation to this, he recalls his time back in 1974 when the ERISA, now known as the 401k or IRA, was passed. When this happened, boomers were urged to enter the stock market despite the FED not knowing a thing about money. School teachers were even transitioning to become financial advisors, knowing that they lacked the necessary financial knowledge. Fast forward to today, the baby boomers are praying that the stock market stays afloat in their 401k, all while issues about the viability of Social Security exist. This is not a coincidence, and it strengthens Kiyosaki's conviction against the FED. When he looks at the current state of affairs, with Powell's practices being close to Volcker's policies, and the debt-to-GDP ratio reaching 120%, he can't help but question people's faith in the FED. Kiyosaki urges people to look into the conventional wisdom handed down to them. It is most likely that anyone can feel successful in a bull market. But he says that this is all a facade and it's important to be cautious. Following the market crash in 2011, a cascade effect happened, driven in part by problems in the repo market caused by the Lehman Brothers and Bear Stearns. They tried injecting more money into the economy in an attempt to save it, but as expected, there are consequences and we're going to suffer through that. The FED is facing huge challenges that might be impossible to resolve, and soon, we'll see if Kiyosaki's prediction is accurate. Meanwhile, he utilizes debt, which basically equates to tax-free funds. His tactics include refurbishing 13,000 apartment units while purchasing more with the cash flow, and recapitalizing when interest rates deplete. He claims this is favorable because he secured fixed rates on those units. He also expresses how he hates the house flipping trend. He chose a different path that is more financially sustainable. By using these tax advantages like appreciation, depreciation, and amortization, Kiyosaki was able to cancel out his expenses, which gave him no tax on debt. His goal is to steer clear of any prospective jail time while fixating on generating more cash. He further explains that he molded his strategy after Biden removed the Keystone XL pipeline. This move caused a massive increase in the price of oil, starting from $30 to $120 to $130 per barrel at present. Although Kiyosaki is not accusing any specific person, he senses that someone is leading us to financial distress, knowing that oil is an important commodity. Kiyosaki stresses that raising inflation has a huge impact on the financial stability of the poor and middle class, a problem that already existed way before Biden's presidency. Other than oil, he also points out the importance of the food sector, where other money-making opportunities exist other than investing in the stock market. At this time, there are various sectors where one can succeed, and it's crucial not to blindly delve into the conventional pattern of education, employment, taxes, and stock market investments. Kiyosaki asserts that the current market bubble is much bigger than the 2008 crisis, and it will even affect stocks, bonds, and credit. Although this bubble can potentially bring substantial chances to earn, it's vital to practice caution about the information you take. External sources can shape your ideas, and they can either help or harm you. Well, that's about it for today's video. If you liked our content, do give us a like and subscribe to the channel. Once again, this is Eminent Investments. Thank you for watching, and we'll see you next time.